Welcome, and thanks for joining this quick guide comparing LLCs, S-Corps, and C-Corps in 2025. Choosing the right entity can save or cost you thousands each year, so in the next few minutes, we'll walk through the tax, ownership, compliance, and practical trade offs to help you make a better decision for your business. This slide compares tax treatment across the three structures in plain terms. An LLC by default pays self-employment tax on all profits. An S-Corp shifts payroll tax to a salary and treats distributions differently. And a C-Corp faces a 21% entity tax with possible double taxation on dividends, which can make sense when profits are being reinvested. Here we run a simple $100,000 profit example to show real impact. As an LLC, the owner faces self-employment tax plus income tax, while an S-Corp that pays a reasonable owner salary can reduce payroll exposure and save several $1,000s annually. Remember, the IRS requires reasonable compensation, so savings depend on how salary and distributions are balanced. When it comes to complexity, LLCs are the simplest to form and operate with flexible management and profit distribution. S-Corp require formalities like officers, meetings, and an IRS election, making them medium complexity. And C-Corp have the heaviest governance rules, corporate bylaws, and formalities, which increases administrative burden but supports more sophisticated ownership structures. Compliance requirements differ significantly between entities. LLCs often file Form 965 or Schedule C with minimal payroll obligations. S-Corp must file Form 1120-S and run payroll for owner salaries, and C-Corps use Form 1120 with full corporate accounting and payroll. Note that FinCEN's BOI report is now mandatory, and missing it can incur steep daily penalties. Ownership rules can be a deal maker or breaker. LLCs allow flexible membership, including non-US owners with certain filings. S-Corps are limited to US citizens or residents with one class of stock and up to 100 shareholders. And C-Corp allow any type of owner and multiple share classes, which is why they're preferred for outside investment and IPO planning. Legal protection varies too. An LLC provides liability separation but can be more vulnerable to veil piercing if formalities are ignored. An S-Corp offers solid protection when corporate formalities are followed, and a C-Corp generally gives the strongest separation and business credit profile, along with perpetual existence when long-term growth and investor expectations matter. When deciding which structure fits your situation, consider practical scenarios. If you're just starting and expect under about 80K net, an LLC default often makes sense. If you're a profitable US business between roughly 80K and 500K, electing S-Corp taxation may save taxes. If you need VC funding, heavy R&D reinvestment, or plan to sell, a C-Corp is usually the right path. To summarize in one line, an LLC offers maximum flexibility and minimal compliance for most starters. An S-Corp delivers the best tax savings for profitable US-owned businesses with medium compliance, and a C-Corp provides the most powerful legal structure for growth, investors, and long-term plans. Also remember, the QBI deduction can benefit pass-through entities. Choosing the right entity depends on your income, ownership mix, growth plans, and international factors, and getting it wrong can expose you to IRS penalties and legal risk. Run actual numbers tailored to your situation, follow compliance requirements closely, and seek expert guidance to avoid pitfalls and maximize long-term savings.